Well, on Buy Now Sell Now, today we are celebrating the very loved bond of Raksha Bandhan. In fact, from the entire team of Buy Now Sell Now, we thank you for tuning in every morning and sending your stock queries to us and trusting us with your portfolio. And keeping with our ethos of being a consumer first, today we celebrate the very special bond of siblings, Raksha Bandhan, with our audience by having one of you live in our studio. So let's welcome our brother and sister duo, Dhruv and Riya. Hi, thank you so much for joining us today.
Hi, thank you for having us.
Thank you, Arun.
Why don't you both introduce yourselves first?
So I'll go first. Hi guys, my name is Dhruv. I've been in Bombay all my life. I've been a sports management student and a lifelong student for business management and personal finance management. In the last couple of years, I've started reading a lot on personal finance, and that's why I'm excited to be here and ask all my questions on personal finance.
Right, Riya.
Hi, I'm Riya. I'm a pastry chef and I run my home bakery, Pudik Home Bakery, called Healthy Hearts. And we are best known for our cheesecakes, Korean buns. My interest in personal finance has been there since a very young age because my father taught me about equity and all things finance. So I'm very excited today now as a young entrepreneur to learn more.
Right. All right, Riya. So definitely we're getting your Korean buns and cheesecake after this because we're getting all your questions answered. But let me get on our guests on board who will be taking all your questions. We're getting Lancelot Ikuna today, who is joining us as the guest. Thank you so much, Lancelot, for joining us. Dhruv, why don't you start with your first question?
So my first question is on Zomato, right? I bought a Zomato when the price was at around 76 rupees back 4 years ago. Right now it's at around 300, so it's like grown by 4x. So I'm wondering what to do with it, whether to hold on, whether to sell, whether to buy more. I'm confused. So that's my first question.
Right. Lancelot, he's asking about Zomato. Very interesting. Now, we on Zomato, we were waiting out for those 300 levels. It's already touched those levels. Good numbers that have come out. What do you see? Do you think, all of that competition and all of that that was impacting the profitability is now behind us and Zomato can see more upside? Or should he book profits now?
I think you have to look at Zomato in terms of valuation a little differently from most other stocks because it's a new age business that can, that has a very large potential, right? But at the same time, it can keep burning cash for a long time before it becomes profitable. And given that background, if you are looking at the potential that Zomato is maybe going to be a very large business over the next 4-5 years, because it will become one of the major leading players in the instant food delivery business and instant grocery business, which is growing very fast. Question is whether they can sustain the kind of growth and generate profits from their business, which will justify the valuations. So now at this present time, Zomato has a valuation of about 3 lakh crores. And if you had to even attribute it as a profitable business and attribute a PE to it, they would have to make at least 5 to 6,000 crores to trade at like a 20 or 30 PE, which is very far away from today because at this point in time they are still burning cash. They are fighting competition. They're trying to establish themselves. It might take a couple of years. So given your personal position, if it is a very small position of your overall portfolio and you can afford to say, okay, I'm going to ride it out for the longer term picture, then one can hold on, and maybe if it does correct significantly in a bad phase, then you can look at accumulating it for the long term. But if it is forming a larger part of your equity position, then I think it's better to book profits because there will be opportunity, whenever there's a negative surprise, to accumulate the stock a little lower as well.
Right, fair point, Lancelot. So, Dhruv, you should book your profits if it forms a larger part of your portfolio and perhaps hold the rest of it because there might be an upside for Zomato as well. But I have to ask you both, talk to us about your bond. It's Raksha Bandhan. Did you fight as children? And also, who takes whenever you take a financial decision, like you say, both are interested in personal finance, who's the one whose calls get taken more?
I think it's very independent. Right? She manages her portfolio, I manage my portfolio.
Okay.
That's when it comes to stock. I think I'll let Riya answer the question on the bond we share.
So growing up, I think we had very different personalities. I was the more energetic one. He was more calm.
Yeah.
So there was that siblings being completely opposite stuff.
Right.
And since we have a 4-year age gap,
Yeah.
so there wasn't as much fight.
Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. And today we are, celebrating the special bond on the occasion of Raksha Bandhan. And we are now, we also already have guests Dhruv and Riya joining us. Riya, let me now come to you. And also, before we get to your query, I hope some of your cheesecake make it to the, Delhi office as well. So let's get started with your queries then. Which stock have you purchased and what's your query?
So I bought Tata Motors a while ago at about 540, after which it went up quite a bit and now it's slightly dipping. So I'm confused whether I should book my profit right now or hold for the long term.
Lancelot, why don't you tell us about Tata Motors?
Okay.
Now, remember Tata Motors, they have been facing headwinds. In fact, the proof of the pudding is in the numbers, and also with the tariff headwinds coming in. Do you think Tata Motors would be a good time to book out? Lancelot, your view, and perhaps Ruchit, you can tell us the levels as well.
Yeah, I think Tata Motors probably a good time to exit or book profit was around when it was around 1,000 rupees. At this point in time, there are a lot of headwinds for the company, and that is evident in the quarterly numbers. We are seeing, there is a slowdown as far as their Chinese plant is concerned. The volume of cars that are being sold in China is reducing. And they also face headwinds in the European and the US markets, given that they will face some kind of tariffs for whatever is manufactured out of China. And if you look at Tata Motors business, almost 75% of its revenue and profits come from JLR, which is its global business. So it's not so much dependent on the Indian, passenger vehicle segment. Although in India, at one time, they were the leading player, but now there is going to be increasing competition with, Hyundai and the other cars also coming out with electric vehicles. So there is going to be heightened competition that would impact their, market share in the EV space. So I think given that we are looking at a slowdown going forward for Tata Motors, both in terms of revenue and earnings growth, maybe a good idea to book profits at this point in time.
Okay, so maybe it is a good idea to book profits in Tata Motors at this point, Riya. But, let's also get a technical check done with Ruchit. Ruchit, now let's come to you. The stock has been facing pressure ahead of its earnings later today. What are you making of it? How do the charts look for Tata Motors?
Yeah, hi, good morning to everyone. Well, if we look at the stock's performance along with the other stocks within the same sector, then Tata Motors have been an relative underperformer over last couple of years. And still the structure does not look that bullish technically as well, because the recent pullback moves got sold into, and the stock is not even been able to surpass this 200-day exponential moving average. So I would advise to keep a sell on rise strategy on the stock, since the momentum readings are a bit oversold post the recent correction. Any pullback move, if you get in the short term towards maybe 700, 720, those could be opportunity to exit from the stock. And rather, if you look at other stocks within the same sector, then M&M overall has a much better chart structure in terms of outperformance. It has shown a good relative strength as well. So I think switching from Tata Motors to M&M could be a good idea.
So switching from Tata Motors to M&M is perhaps a good idea,
Okay,
Riya. That's the consensus call from both Lancelot and Ruchit. But since tomorrow is Rakhi, Dhruv, what are you planning to gift Riya? Because that's something that every sister watches out for.
Yes.
I think I'm not going to let her have the thrill of revealing my answer today. I'll let her get surprised tomorrow and see what she has in store.
Right.
Yes,
But
can't wait.
Riya, since the day when girls can really
Yeah, it's
build
like
up their...
Christmas, but for sisters only.
Yeah, it's Christmas for sisters,
Yeah.
like you mentioned. So for tomorrow, when you get your money,
Yeah.
how are you going to? What are you planning for that? And I think you had a question on that as well, so you can ask our guests about that.
Yeah, so this year I wanted to invest the Rakhi gift money that I get, and hopefully I get a significant amount. I wanted to know whether it would be wiser to invest it in stocks or gold.
Oh, interesting question. Whether to invest in stocks or gold. Lancelot, let me come to you for this. Gold has hit an all-time record high today as well. 1,02,000 is where gold is sitting at. Is there more upside? Gold has been a safe haven amid all the global volatility, but is there more upside in gold? And stocks versus gold, what would be a better bet?
So I think, the first question I think is whether there's more upside in gold. I think there is going to be more upside because one has to look at the longer term scenario and how it is playing out. So most of the international global governments or even the financial banks have been moving their assets away from US dollars because of the way that they anticipate or perceive that US may no longer be the reserve currency of the world. And given that background, a lot of reserve banks have been moving money to gold, and that trend is only going to continue. So apart from the volatility you are seeing in gold prices because of the markets, you're also going to have the shift of gold, which is going to drive prices further up. So yes, gold is going to go up, but it's not necessarily to follow a linear path and go up, on a regular basis. There may be periods when prices could remain flat or even, negative for quite a bit of time, and then you could see it resume, the upward trend. As far as how much, whether you should buy gold or stocks now, I think it depends on your asset allocation. And if you're equity heavy at this point in time, it may be worthwhile starting a kind of a monthly investment into gold so that it, slowly builds up into 5 to 10% of your portfolio positions.
Okay, so that's the view. Now, Ruchit, let's also come to you. What do you suggest? Should one, put their money in blue chip stocks, or should they go for a gold coin there instead?
So I would advise going long on equities through ETFs. So I think that could be a better idea because recently we have already seen a good corrective phase from the highs in the equity markets. And this correction that we have seen, in fact, earlier we witnessed a good correction from the month of October 24 to March 2025. We resumed the uptrend from the March month, and what we have witnessed in last 1 month, it's more of a correction within an uptrend. So I think if you have a bit mid to midterm perspective, then market should form a base somewhere around this 2400, 24,000, 24,400 range, and resume the next leg of upwards maybe towards its previous all-time highs. So I think this correction provides a good opportunity to create fresh longs in the equity markets, and going long through ETFs, maybe Nifty Bs, could be a good idea to invest the amount that you'll get on the Raksha Bandhan.
Thank you for that advice. Probably Nifty Bs and maybe a staggered investment in gold as well.
Yeah.
You can have a mix of both.
Yeah.
But thank you so much, both Dhruv and Ria, for joining us. It was a pleasure to have you both in the studio for us.
Thank you for having us.
making our Lucky extra special this year.
Yes.
Thank you so much. All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll come back and get all your questions answered from our experts. Stay tuned.
All right then, viewers, let's get back to some of the queries that you all have sent us. We are still joined by Lancelot Dacuna, who's the Chief Investment Officer at ValueX Wealth Connect, and we are also now joined by Manas Jaiswal on the technicals. So let's get back to all the queries. And now this query is coming from Carol. She holds 60 shares of UPL. Now she wants to know whether after tariffs, should she continue to hold these shares, or should she sell at the current rate? Lancelot, why don't you take this one?
So I think, the outlook for UPL continues to look better than what it was before, despite the tariffs, because worldwide we are seeing a bit of improvement in the situation for agrochemicals, as well as, there is a lot of the competitive intensity which was there in terms of, overstocking has reduced. Quite a bit of the destocking is complete, and now you should start seeing the realizations go up. Given that UPL is a global player, it has plants all over in different geographies. I think they would be better off in terms of the tariffs, rather than, because it's not export purely from India, but it could be from other plants in the world as well. So they should do better than, considering the impact of tariffs on India is announced at 50%. So from a long-term perspective, I think, yes, it looks good at this point of time as well to hold on to this stock.
All right, so that's the view coming in on UPL, a hold call coming in. But let me introduce Manas Jaiswal from Manas Jaiswal Technical Research Group also joining us. Thank you so much, Manas, for taking the time out and joining us today. Manas, this question is coming from Lakshmi Narayanan from Trivandrum. He says he's holding 292 shares of Farida at a buying price of 245, and he's been holding it for the last 100 days. He wants to know if he should be averaging it in, or should he hold and wait for, hope for a better improvement of the stock price to go up.
Good morning, Ankita. So if you're talking about Irida, I think the trend is still very much negative because the stock is not sustaining above 10-day moving average. It is making lower tops and lower bottoms. Yes, the stock has some support near 134, 136, I believe. But if it breaks 137, then you may see more weakness and the stock can go down and test 110 also. I think this is not a right time to buy the stock. I think you should buy it on a breakout above 22 moving average, which is placed near 155. Otherwise, just avoid it.
Okay. Manas, there's another question for you. It's a slightly long-term one, but still the viewer wants a target price. So if he could suggest one. This is Sivakumar writing from Kerala. He's been holding 120 shares of BEML at a price of 3,670 rupees. He wants to know whether it is worth holding for another year. Could you suggest a target price that this particular stock could hit in 2026? Good
morning, Kanishka. So if you're talking about BEML, I think the time is very good because we have seen correction, stocks trading up near 200-day moving average. It has a lot of support in the range of 3,800 to 3,600. So for long term, definitely you can take a chance. You can buy the stock at current levels, keep your stop loss below 3,400 for long term, and you can set the target of around 4,600, 4,800 again in next for next 6 to 8 months time.
Right, moving on then from BEML to the next counter that is in focus, or the question on is in AB Capital. This is Mahesh who's writing in from Delhi. He's a senior citizen. He has 500 shares of AB Capital. He's bought it at a buying price of 205. About 4 months ago, he wants to know if he should hold on to it or exit it. He wants to know this perhaps in the next 6 months or 1 odd year. Lancelot, what would you see for AB Capital?
So I think AB Capital, the underlying businesses are basically the life insurance and the general insurance and the financial services business, and they are growing. In this kind of a environment, you will see good growth coming in from these businesses. However, valuations of the company have run up quite a bit, over the last 6-8 months, and so one should be a little cautious in terms of maybe do some profit booking because you've got some benefits, such large benefits. But longer term, yes, the stock really looks attractive.
Not in this edition of Buy Now Sell Now, Lancelot and Manas, thank you so much for taking the time out and answering all our questions. With that, it's a wrap, and Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Markets at noon coming up next.